Those numbers coming in, Joe, let's just talk about this. Earnings came in at 42 cents a share. That was 3 cents below what the street was expecting, although revenue was above the Wall Street forecast. The bank actually benefited from strong mortgage banking fees and higher equity markets, but that was offset by higher expenses. And as you mentioned, Joe, lower net interest income. It looks like the net interest income, the margin was just 2.13%. The return on assets, just 0.42%. But I know Wilf has been digging through those numbers, too.
And we're going to get to him right now. Let's get over to Wilf. He's been looking through the third big bank reporting this morning. Wilf.
Yeah, and just to add to what you guys are already saying on the Wells Fargo point is to compare the credit loss decline compared to some of the other banks. So that theme across all the commercial banks, which is encouraging. Wells Fargo's Q2 provision for credit loss was $9.5 billion, right down to $0.8 billion. So that compares in scale of reduction to JP Morgan's, which went from 10.5 to 0.6. But all of them, Citi and Bank of America as well, seeing that big decline in provisions for bad loans, which is encouraging. Though pressure for Wells Fargo, though not quite to the same extent, like Bank of America on net interest income. There we go, Joe, for you. And I guess coming into this quarter, one of the questions we had was, will there be a continuation like there was in Q1 and Q2 of the place to be in 2020 is investment banks, not in commercial banks? We thought that would continue, but perhaps not to the extent that it looks like is the case again here, because Goldman Sachs, very strong numbers, as you mentioned, in the face of the likes of Bank of America, slightly disappointing. 10.8 billion revenue, way ahead of 9.3, and EPS 9.68, well ahead of a 5.56 estimates, and a high teens ROE. That hasn't been the case for Goldman for quite some time. I will say, though, investment banking and trading, similar theme across the other banks, which is lower quarter over quarter, higher year over year, and that their beat, not to look down on it because it's a very strong beat, really came in the asset management division, where they got 2.8 billion in revenue. The forecast was for 1.8 billion, but very strong numbers for Goldman. You're seeing them up 2%. You're seeing Bank of America down 2%, which just sort of summarizes a theme that's been playing out if you compared their share price performance year to date as well. And obviously that bodes well for Morgan Stanley, who report tomorrow.
Shepard Smith here. Thanks for watching CNBC on YouTube.